Hello everyone and welcome to the program. It's Thursday, July the 2nd. I am Bosun Amofayo here at the China's global headquarters in Lagos, Nigeria, sitting in for Harriet Agbiyi, your anchor here on the show. Now let's get started. Nigeria's equities market suffered an estimated $100 million. That's about 203 billion naira loss yesterday, the first trading day in the new month of July. On the same day, the naira went down to 230 on the US dollar as pressure mounted on Africa's largest economy by overseas investors seeking further clarity on the country's economic direction in the new year, now left with just 6 months to go. And Nigeria's position on the foreign direct investment inflows table has declined from 3 to 5, according to a report analyzed by investment and securities firm FBN Capital. And from the same firm early today, released a scathing performance outlook of the just concluded second quarter for banks and non-bank companies listed on the Nigerian Stock Exchange. A very busy next 1 hour here on the program. We'll take a look at the message of the market, bonds that is in the main in the first half of 2015, and later in the program, doing business in Nigeria, how elections and politics drag businesses in the first half of the new year. And watch out for our commodities market report and the energy market wrap with Ada Akonobi from Financial Derivatives Company. That looks like the package this morning. Let's get down to the markets now with a review of the first trading day in July. Here is my colleague and anchor, Nicola Christico. Good morning to you.
Good morning to you,
Welcome to the show.
Great to be here with you. Top on the news this morning, we are seeing reactions, especially from the interbank market to the central bank's new FX controls.
The Naira is in a quote-unquote, I don't want to use the word tailspin, but it's moving around.
You're being positive this morning. Interesting.
In circles. Again, well, if you say tailspin, that could be like something falling out of the skies.
230 at
but
the
it looks like
market.
230 at the parallel market. There are a lot of issues, and we're just 3 weeks away from the next MPC meeting.
How much longer can the CBN continue to support the Naira?
Well, if we have what it takes to support it. But now it's down to administrative controls, if you want to put it that way, in forex management. That's what the central
We'll get to that in the course of the show. But of course, let's give you details of how all the markets are doing now. At the interbank market, average NIBOR rates increased 29 basis points to 14.16% as 28 billion naira left the system via an OMO auction after 30 billion naira worth of 260-day bill was on offer at 13.75%. The overnight rate grew 42 basis points to 8.50%. The 1 month NIBOR added 25 basis points, 3 points NIBOR gained 23, while the 6 months NIBOR gained 26 basis points. The Naira increased by 15 basis points against the dollar to trade at 198 Naira 85 kobo, in spite of reports of further depreciation at the parallel market where it sold 230 Naira to the dollar. The local currency also gained 56 basis points against the pound to trade at 310 Naira 88 kobo. Now, analysts at Cordros Capital say that's a result of the recent forex restrictions by the Central Bank of Nigeria. The Treasury bills market extended its bullish run as average yield contracted 12 basis points to close at 13.61%. The 176 basis points increase recorded in bills between the 92 DTM and 337 DTM was largely offset by a 638 basis points contraction witnessed between the 8 DTM and 64 DTM bills. Sell pressures continue to prevail on the longer end of the curve while investors seek respite in near-term bills. Yields on the 204 DTM, 246 DTM and 309 DTM bills remained unchanged. Bullish trading returned to the bonds market, leading to a 4 basis points contraction in average yield to 15.11%. Although yields on the August 2016 and July 2030 bonds were unchanged, bonds maturing between April 2017 and March 2024, including the July 2034, all witnessed considerable demand. Following recent sell-offs, renewed appetite returned on the November 2028, May 2029 and November 2029 bonds as average yields contracted 9 basis points on average. Over now to the equities market. The bullish momentum we saw at the last couple of sessions did not last. The NSE All-Share Index closed down 1.77 points at rather 1.77% at 32,863.43 points. Now, that's the lowest value since the 31st of March. The 1.77% close is the biggest loss also since April the 8th, while market capitalization lost 202.57 billion naira to close at 11.22 trillion naira. The decline pared the week-to-date gain to 0.03%, whereas the year-to-date loss expanded to 5.18%. Market breadth worse index, 39 losers only and 13 gainers were recorded. Volume traded increased by 20.48% to 323.56 million, shared value at 4.73 billion, and traded in 4,090 deals. Rotimi Fakayejo joins us now to put more life to all of these numbers. Good morning to you, Rotimi. Okay, I'm told Rotimi is not available to join us at the moment, but we will continue. We will try to get in touch with him in the course of the show. In the time, let's give you more updates on all the sector indices which lost yesterday, the first trading day in the third quarter of the year, and at the beginning of the second half of the year. All the sectoral indices lost yesterday. First, the consumer goods came down 0.91%. The banking sector was down 1.02% rather. Also, the industrial goods sector came down 1.45%, while the NSE oil and gas sector dropped 0.42%. Bosin, I'm forced to ask you here. I want to be as optimistic as you've been from the beginning of the show, but I'm thinking it's only the first trading day.
I know it's quite a very blistering day. $100 million of the Nigerian market is quite a lot. But if that's quite significant for a very small market, well, don't worry about the size of the entire market cap, about almost $60 billion. However, where the story was coming from was that who's losing and who's gaining. If you look at the oil and gas guys, they went down, the oil and gas stocks. The banks have their own issues, and the numbers aren't looking good. Again, this is cutting across the market. If you look at where we started the week, we have the Nigeria's Eurobond on the JP Morgan index, the yield going higher. Now we're close to 15%. That is not good for us.
On the back of the threat, even
on the back of the threat,
time is running out.
Yes, we have 6 months, but we could just still put things together before December, whether we get kicked out of the JP Morgan GPIEM index or not. But on the other side, you find investors also worried about what happens in the currencies market. All of this coming from the political space and our governance space as to where is the clarity with regards to where the businesses and the economy go from here, the lack of a ministerial team in place.
Policy direction at the moment.
Policy direction in very clear-cut terms. We are leaving things lying fallow for too long, and